Good morning. Welcome to another edition, actually a special edition of our trading update. My name is James Chu. I'm the head of market and investment at Reyker. You can see I got three other guests with me today. On my left hand side is Andrew, who you usually watch every day. He gives the update on the market every morning on behalf of Reyker. On my right hand side is Alex Baverstock. Although he's called Alex, nothing relates to Alex Salmon as far as I can see. He spent a lot of time in Scotland in a few years ago, and he wrote an article about the Scottish vote. So given there's a special day today, so I asked Alex to join me. And also Gerry Celaya. He's our independent strategic advisor to the investment committee. He's the chief strategist of Reyker Asset Management, and he joined us today to talk about this historic vote result from Scotland yesterday. All the Scots yesterday actually in Scotland there were two votes, okay, historic votes. One is to do with golf, which I'm not going to talk about a lot now. The second is about whether Scotland should be an independent country. And as we all woke up this morning, it's no, okay? So I guess market should have a good rally today. I think as far as I can see, the FTSE 100 was up when it opened about 15 minutes ago, was up about 40 points. But what do you think, Gerry, about the bond market? Because one of the questions that occurs during the last couple of weeks is they worry about the yes vote affecting the gilts market and interest rate. What do you think is going to do to the gilt market? And more importantly, is this note vote going to change the times or schedule for Mark Carney in raising interest rates?
Yeah, those are good questions, James. And I think the quick answer is it won't change the Bank of England's policy-making decision, but more importantly, it'll change the market's perception of the Bank of England's policy-making decision. I think the Bank of England was pretty happy looking at the data, taking things as they came, making contingency plans. I think in terms of their actual timetable to raise rates, Scotland didn't really factor in hugely until they knew what the result was, because it's such a binary outcome, either yes or no. So they're probably just looking at the stuff they've been telling us, they're looking at wages, any sort of wage pressures, inflation, growth outlooks, things like that. And those haven't really changed too much over the last few months. That would make the Bank of England either raise rates anytime before Christmas or anytime in probably Q1. So we're still thinking maybe a Q2 sort of rate hike from the Bank of England. As far as gilts are concerned, there was a little bit of uncertainty about who would pick up the debt and this and the other, but the Treasury made it clear that they were going to pick up the debt no matter what. The only horse trading was going to be whether or not Scotland participated in some of the debt burden, given some sort of currency union requests and things like that. That's off the table now with a no vote. So you'd have to be looking at Treasury saying, okay, nothing's changed, and gilt traders probably thinking nothing changed, and the gilt market once again eyeing the usual wage growth, inflation outlooks, Bank of England rate hike outlooks, and effectively, are we going to go to 2.4 first, or are we going to go to 2.8 first in the 10-year gilt?
Yeah, it looks like that according to my data feed here, is the gilt has gone up a little bit this morning. So
small relief rally. Like one of the key things where I think the market was looking at things probably incorrectly would be the credit default swap market, which we touched on before, where that was around 2021 in terms of basis points.
UK, you mean?
The UK, yeah,
Okay.
5-year sovereign. And that actually jacked up to around 25, 27 ahead of the vote, which was strange because it's a thin market at times, but it's one of those things where it seemed like traders were betting on some sort of wobbles in the UK's credit outlook, which most macroeconomists would say wasn't really going to happen. No matter what happened to Scottish vote, no matter what happened to sterling, no matter what happened to anything else, they would say the fundamentals of the UK ability to repay its debt was pretty strong still. So you'd expect that to come in pretty sharply now.
Okay. Well, we look at UK stocks a little bit earlier. Basically, relief rally. Clearly, most of the stocks have gone up. So, but it's going to turn into both you and Andrew a little bit on this. And also, who are the winners and losers after this no vote? Sectors, industries, any tips for companies, for the audience who are watching our trading update now?
We'd be looking at the ones that were traded as proxies to the Scottish yes vote implications. So things like SSE, things like the banks, RBS, Lloyds. You could go down the list, I guess Weir Group, maybe Wood Group. You could even talk, I guess, a little bit about some of the outliers, which would be the financial services companies to some extent. So Aberdeen Asset Management, Standard Lives, things like that. Those would generally you'd expect get some sort of, okay, some of the pressures or some of the uncertainties are being relieved. Let's go back in and invest in them if long-term investors had taken some money out or hadn't committed to them yet. In terms of actual quote-unquote short-term trades and things like that, I suspect SEC was being traded as a proxy to the vote, given the share market movement of the last few weeks. So you'd expect that to do pretty well.
I see. Okay. Andrew, what do you think?
Yeah, I agree. I think as well, it's sort of, we had the uncertainty, well, I'm not saying not so much uncertainty, but the fact that RBS came out and said last week, we're going to relegate to England because of the fact that we're mostly owned by the UK Treasury, or the UK taxpayer, if you like. But I think there was an interesting report overnight that said that likelihood is that RBS chairman will come out this morning and say, you know, we're committed to the long-term future in Scotland, and I would imagine that would probably instill some positive reaction from shareholders that the future is there. I think as well, Lloyd's obviously got big presence as well through their further Bank of Scotland's part as well. So, as you say, banks probably key winners here, and other financials, because more stability in that sector.
Yeah.
Losers?
I've been looking through the potential losers, and I think Andrew and I discussed it, and it's one of those things where you have to be looking at the strong pound implications, where maybe not so much against the dollar, where the dollar has its own story, but against the euro, where the euro is under a lot of pressure because of the interest rate policies and outlooks there. But you'd have to be looking at firms that won't do so well if the pound rallies another 5%, let's say, against the euro. So that could be exporters, it could be some of the key exporters to Europe, it could be some of the key exporters to Asia. They may be under more currency pressure. And you've already seen some of that in some of the results. It's always the thing to do is to blame the currency moves, because it's like, God, you know, things happen, we lost money. But, you know, it's one of those things where you have to look through the balance sheets and look at the sort of reports that the company has and look at their exposures and say, okay, is the currency implication going to be important for this company?
Interesting.
We've seen that over the last few days, haven't we, with a number of the results that have come out. And as you say, everybody's blamed the strong sterling over the course of the thing. You know, we've not done very well because of the fact that we're struggling in the FX market. Why don't these people kind of learn that hedging strategies might be better? You know, they kind of thinking, you know, if we take all our exposure to one currency, or, you know, let's think about it for the long term. Perhaps an interesting business opportunity for some people in our industry, you know. So
I think hedging and advice on currencies is pretty important, and I think you learned from the Japanese experience, where companies basically have to retool and do all sorts of rethinking about how to live with a strong currency if it lasts for 2 years, 5 years, which sterling could, given the fact that the Eurozone economy is basically still in the woods, or it's still in the doghouse, if you want to put it that way. And the UK economy, now that if you want to call it the threat of a yes vote is being removed, you've got to be looking at the UK economy and say, okay, things are still looking pretty good here.
Interesting. Just turn to another angle there. Obviously, we are not political analysts.
True.
But remember, after this vote, the next thing is going to happen is the 2015 general election in the UK, which we all expect to happen. It's obviously have some implication to investors in stock market, currencies, and gilt as well. How do you think this vote result have shaped or affect that general election result next year on the political side? Maybe we'll start with you, Alex, because obviously you seem to have quite an interesting view on this.
Well, obviously I think both party leaders are very relieved at the minute.
You mean which party? Not your namesake.
Well, both David Cameron and Ed Miliband, both very relieved. I think David Cameron, especially at the minute, a lot of pressure has been on his shoulders. However, I think Ed Miliband, at the end of the day, in the long-term view, is going to see this as, thankfully, Scotland has voted and saved us. Labour is still there. And I actually think in the long term, that might actually cause a bit of uncertainty, a bit of change in the vote. Looking for the next few years, the fact that Labour in the polls at the minute there is some favouritism there. That's certainly looking like it. And David Cameron will be asked a lot of questions in the short-term future as well as the long-term future about how unstable the relationship was and how the union was put at risk.
Interesting. So actually, from what I've just heard, is basically this vote actually increases a little bit of election risk. What do you think? Jerry, who live in Scotland.
I'd have to agree. If by election risk you mean you might not get a clear-cut majority for the Conservatives and/or the coalition government may come under pressure, I would have to agree with that. I think Labour saved itself pretty nicely. I think Gordon Brown's made a big comeback in many people's eyes. He was justly or unjustly blamed for the credit crunch. I think we take the view it was a bit of a poison chalice.
Remember, he saved the world. So
Yeah, exactly. I love that speech still. I use that line whenever I can. Gordon Brown saved the world.
Andrew, what do you think?
Yeah, I go. I agree with everybody. I think clearly Labour have done particularly well. I think in this particular election or independence votes. But I think looking to the long term, you've got to say that it could have been potentially political suicide if there had been an independence vote here. But luckily the union stays strong. Although there has been obviously clearly a large number of people that have voted, 40%, 45% of the populace that did want to see independence. But luckily enough, I think for the union, we are still in one piece.
I think it's going to be the big question for political analysts and scientists for the next 12 months, 18 months, is what happens to the devolution process in the UK. And that'll be interesting for you guys as to what actually happens in terms of local governments, industry, finance, everything else that's intertwined with government regulations and things.
Okay. Well, one of the things that I was prepared to ask, because we do have a lot of clients asking questions, and generally a few of our clients were worried about the UK stock market if there's a yes vote. Now, clearly, I don't need to ask that question, but I still think it's a question to address. So as to end this conversation this morning as a special trading update, maybe just given what we've just discussed, the political risk, the economic situation, the pound, etc., what's your outlook on the UK stock market in the next maybe 12 months going to, and basically, even though I'm just thinking even though it's a note vote, maybe we should adjust our weighting in UK equities for investors should basically look at what they have invested in UK?
Sure. My gut feeling is that investors who may have been cautious about committing to the UK stock market should see some of that caution removed now. Some of the concerns should be eased. The yes vote, was maybe a concern to some people. We always took the view that it was a binary decision, very difficult to hedge against. However, some people did actually take some money off the table. We would expect that money to come back on into play. In terms of the UK, it's been puzzling how the FTSE hasn't been able to break to new all-time highs. We still expect it to happen this year, so that's a move above 6,950, which is the 1999 high. We would expect to move towards 7,000, maybe 7,200 by Q1 next year. So looking out, we're still positively bullish. We think the FTSE 100 is held back by the large cap miners, oils, things like that. But those are basically cyclical plays on China. China's recovering. Things should do all right. In terms of the UK itself, though, if you want to look at the UK economy driving shares, then you probably have to drill down to the FTSE 250 and maybe some of the small caps, AIM, things like that. And those are the guys who really get the power injection from a strong UK economy, which is going to be good news for a while. The Eurozone economy is a big risk. The downside there is still heavy on the UK, given the fact that it's a trading partner and all that. But the US economy is doing well, and US stocks are hitting new all-time highs. So at some stage, you would expect the UK stocks to join the feel-good factor, I guess. The scary thing is, as we talked before, is do you buy shares at new highs? And a lot of investors think, it's gone up too much. Well, there's lots of ways you can mitigate against that risk, either through structured products that you guys know about, or through basically committing to shares that are going to play catch-up. And you look at the traditional investment tools, PE ratios, things like that, to see whether or not that stock is expensive. Then you've got to cyclically adjust it and say, is it expensive given the fact that we're in a bull cycle?
So Alex, what do you think?
I actually think the uncertainty has been taken away. I think that positive contribution is really going to help the FTSE, certainly the FTSE 250. I positively will see the FTSE breaking 7,000 in the long term, maybe not the short term. I think, Jerry, what we were just talking about, the idea, the fact that big caps there, they are still, they weren't really, they were immune to the Scottish situation, I think. And the fact that recently the markets were certainly very positive that it was going to be a no vote. I don't think the short-term change will be absolutely massive, but I think the long-term is very positive for the FTSE 100 there. So.
What do you think, Andrew?
Yeah, I agree. But I think also it adds credence to us in the investment world are forever saying diversification to make sure that we're not necessarily focusing on a single market, because the FTSE, yes, for UK people is important, and we have, I suppose, as we've talked about, perhaps underperformed most of our major competitors in terms of indices, the US, and the like. But I still think there's strong global growth available to us. Eventually, European markets will show signs of recovery, which provides us with interesting opportunities. There are the Asian markets, you have the South American markets. It's a whole. Recently I gave a talk, as you all know, on international investing, and I think the world is shrinking. Everybody is interacting with everybody else. Markets are becoming easily accessible to investors. So I think if we look at the long approach, yes, I'm very much bullish about the UK market, but I think as well investors should clearly be looking at international opportunities as well.
Okay, thank you, gentlemen, for joining me this morning for this special edition of Trading Update. So I look forward to another similar type of discussions in future. But if you got any questions or you want to talk about some of the investment ideas, especially related to UK stock market, international stock market, etc., what opportunities are there, feel free to contact us at the market investment team at Reyker. Thank you.